Hello, I'm Brian Resnick. I'm a senior investment strategist with AllianceBernstein, and welcome to Uncommon Capital, a podcast where we explore the far corners of the private markets and learn important lessons from professional investors. I'm so excited to speak to today's guest, Lucas Detor, managing partner at AB CarVal, a $20 billion opportunistic private asset-backed credit platform. He's been a successful investment professional for over 20 years with a focus on private markets. Prior to joining AB CarVal, he was a managing director with Morgan Stanley. And before joining the investment management industry, he served as a member of the U.S. Army Reserves and the New York National Guard, and perhaps most interestingly, as a special agent with the Secret Service. Lucas, thank you for your service, and thank you for joining me today.
Brian, thank you so much. I love the title of this because I've been called a lot of things in my life. Uncommon is certainly one of them. So thank you for having me.
Absolutely. So, I want to start off by asking a question that I know everybody's going to have, which is, how does someone go from being a Secret Service agent to a managing director at Morgan Stanley?
It may seem like I had a circuitous route, and I did. And I think that one of the greatest gifts anybody in the world can have is to graduate college without debt, because it allows you to have a lot of intellectual curiosity in the world. Being a federal law enforcement agent was a goal of mine since I was a young boy. It's why I joined the Army. It's why I drove a tank. I knew that, plus, believe it or not, an accounting degree were the things that would allow me to have the best shot of trying to attain that goal. So I put all those things together. I did it. And then I ended up in the Secret Service where I focused on bank fraud. And so money was the center of all the things I was focused on there. After having served 3 years at Pricewaterhouse, I got my CPA. I was in the broker-dealer practice. That was my first taste of Wall Street. But then I realized as a bank fraud investigator that it was the center of everything. And I used that to be involved in organized crime across all the different organized crime, that whether it be the different mafias around the world, violent crime, narcotics, all those things. I was in the World Trade Center. That's where our office was then. And, we really had a great group of people focused on a terrific mission in addition to our protection mission. And I really enjoyed it. And I really liked kind of standing up for the little guy. That was something special to me. I ended up, as I was going through my career, getting a scholarship to NYU's business school. And at first, I was not going to take the scholarship, but in terms of like when you think about life and people that help steer your direction and paying forward, the special agent in charge of the office, a guy named Chip Smith, he got wind of it. And so did my direct boss. And they said, you have to take this scholarship. Education is everything. So I started off, he's like, you can work nights if you want. So I was working nights, and then I was going to school during the day, and I was on call on the weekend. That was a disaster. I was carrying a gun. I was driving a car. I had a situation where I did class one day. It was a gigantic classroom, and the professor was a Goldman Sachs retired partner, very fierce guy. Professor Silber, I think his name was. Anyways, 300-person lecture hall. I have my bag with all my kit in it. So my pins, my radio, my stick, my cuffs, everything. And I walk out. And I get downstairs and I realize it's gone. And I have to go in and interrupt his class. It's 350 people. It's full. I open the door and he's like, hello, what are you doing? I was like, I got to get my bag. He's like, you can get it after. I was like, I'm getting it now.
Yeah, that was a first for him, I'm sure.
And he was like, I will see you in my office after this. And I said, yes, you will, Professor. I went, showed him my badge and everything. And he was like, okay. But that was the beginning. Then I had a little situation with the car where I realized it was unsafe. So I went to my boss and I was like, you know what? I'm done with school. And he's like, no, you're not. You're going to take a 3-year leave of absence. You're going to go finish school, work for a year, and I never want to see you again.
Wow. What a great influence in your life.
And he and this guy, Tim Maslick, were both really leaning on me to do it. And I ended up going to Morgan Stanley, where I was in the distress group. So my fraud experience came in quite handy. I became an analyst. I moved on to be a salesperson, a trader, a head trader, ran one group, ran a global group, and it was been a fantastic career since then. But those couple people really helped me remember the pay it forward mantra.
And so when you were driving a tank around, could you ever imagine that this is where you would have ended up?
No, I was a private E1 in the Army driving a tank. The Army's wonderful. It's a great place, but it has the ability to take fun things and make them less fun with maintenance and all the other things. So you learn a lot. But I do think for me, having had a lot of luck in my life and a lot of success, to start off and be a private, everybody's really actually a private at heart. And when you know how it feels like to be the person who's the private, who's cleaning the bathrooms, who's doing the serving of the food and cleaning and all of those things, if you can always remember that perspective, it's great. I still do jujitsu once a week with a coach who I'm old now, and he doesn't hurt me, but I think it's very important for everybody to know you can get choked out in a minute.
So everyone in the office feels safe when you're around, basically, is what you're saying.
I don't know about that, but I really do appreciate the fact that, we all have to treat each other as equals.
Yeah, that's great. Well, thank you for that. So I want to start off, and make a little bit of a transition to talk about investing. Now, you've been a very successful investor. A lot of your career has been focused on opportunistic credit investing, much of which has been in the asset-backed world. And so I want to ask you, for someone that's out there that is either done this for a while or new to the space, what does it take to be a successful opportunistic credit investor?
That's a good question, Brian. I think if I had to boil it down to three things, I would say flexibility. So intellectual flexibility being one, humility, and leaning into my old life. I'll steal a phrase that everybody goes home alive. And let's talk about each one of those specifically. By virtue of the name, what you said, opportunistic, a lot of the things that we get involved in are because there's been a moment of pressure. And we can't predict those moments of pressure, but we have to be willing to respond to them. When you think about intellectual flexibility, you have to be able to be comfortable being uncomfortable. And that dovetails into that humility, where you better realize very quickly in any of these situations, you are the dumbest person in the room. You know the least. Now, you can fix that. You can fix that with price. You can fix that with structure. But you're the dumbest person in the room. And a lot of people run into trouble because we have a lot of very, very smart people that show up and think they're smart in this. But you're dealing with people who've been in this space for 20, 30, 40 years. They know everything, the ins and outs of the asset or the specific situation. And you're coming in with your Excel spreadsheet and you're going to show them and tell them who's who and what's what. If you do that, you're the mark. But I think that's important. And then the third piece of the puzzle, where I think back to the Secret Service, which is first principles have to hold always. How am I going to get my money back? You got to start there. Before you worry about the hopes and dreams and all the great things that are going to happen and the terrific IRR, how am I going to get my money back? Because if the worst thing I ever do for an investor is give them their money back, my head hits the pillow and I feel okay about myself.
So return of capital first before you worry about the return on capital, so to speak.
Yes.
So now, obviously, these lessons that we learn in any aspect of life typically come with some failure. I mean, there's really not much that we can learn. Not many people are successful without having some level of failure. And so I'd love to explore, maybe an example, or it doesn't have to be a specific example, but an example of a time when you had an investment thesis or an investment idea and it just didn't go as planned.
I would amend your comment about some level of failure. You seem to be tap dancing slightly around that. I think you have to have a significant amount of failure, and you tend to learn more from failure than success, in my opinion. And it's very much about trying to not make the same mistakes twice. So to your point, we have a process where we run, it's called an after action report. I stole it from the military and the Secret Service. After every engagement, when you get done, there's a simple form that you go through and you ask people who were involved in the engagement, what went right, what went wrong, what could we do different, without assigning blame. But really the whole goal of it is to make sure we don't make the same mistake twice. Because history, whether we look back at the last 10, 20, 50, thousands of years, I'm reading Marcus Aurelius right now. He's 1950 years old today, and it shocks me that everything he's going through is the same that we are having now. You can learn from that. So the ways you learn are from experience and from reading. General Mattis says you're functionally illiterate if you haven't read like 200 books, because why wouldn't you learn from all the mistakes of the past? Why do you have to make them yourself? So I love your question. And I will tell you, we had a situation where at AB CarVal, we started investing in dry bulk vessels. So we were owning and operating these ships, which could be from handy size all the way to Cape size. They're bigger now, but these are, think, 10 to 15 football fields long, holding significant amount of basically coal and iron ore, and then some minor bulks. There's actually like 200 bulks.
And these are crossing the ocean. These are those kind of ships.
Yep. The big ones are basically going from Australia to China and from Brazil to China. Those are the main routes. And then there's a lot of other things around them. So we got involved in owning and operating those. Now, those vessels, just to give you an idea, had gone from a value of maybe 110 million down to like 35 million, 40 million. So that felt opportunistic. That felt like a distress.
And what was the cause? What caused the drop in price for those shipping?
There was supply issues, and China's economy had kind of gotten hot and slowed down. And so some of those things had happened. And it was a classic too much, too soon. And so we thought the overbuilding was done. The day rate for the vessels had gone from like hundreds of thousands a day to like 13 to 15,000 a day. That's how much a person who's renting it has to pay every day. That seemed okay. We started a project where we were going to buy these vessels because we thought they could go back. We could make money running them, but they could go higher. And it began an odyssey. There's a fiction book, The Shipping Man, written about it, which is not that far away from reality. And now this was being run by one of our team members who ended up leaving, so I stepped in. And it was just very, very clear to me that when we entered the trade, we lacked humility, and we definitely didn't think we were the dumbest person in the room. And we were dealing with these shipping families who had been doing this for not just one generation, many. That's who we were buying it from. And so I remember the moment when I got most nervous about this investment, and we were relying on a lot of advisors at the time and consultants, which is also a red flag, because that's like babysitting versus raising your own kids. I went to a ship christening in China, in Wuxi. The guy who was running the strategy got horribly sick. I had to give this strange speech that was translated, and we went on a tour of the vessel that we were buying. And that's when I realized the guy who was with me, who was running the strategy, he thought he knew what was happening. And the person who was giving us the tour could have literally been giving me a tour of the Battlestar Galactica. And I would have said, this looks wonderful. I knew right then and there that we weren't being humble enough and that we could potentially be in trouble. Funny story, that ship actually, when it was launched, after we broke the champagne on it and all the rest of it, it made it like 100 yards and literally the propeller fell off. And this is a gigantic ship. They had to drop the anchor, get divers. So that...
Well, it's better it fell off close to shore.
Well, this ship then went on to a checkered history. I'll tell you the rest of the story around the investment, but this actual ship, when we went to sell it several years later, when you sell a vessel, the inspection is done. And when they leave, you throw the ropes on the vessel. And when the ropes hit the vessel and it goes from the dock, it is now everything on that is the new owner. It made it like 100 yards and it caught fire. And we didn't know, but it was just like, it maybe was just a cursed vessel. Like seafarers have a fair amount of lore. And so maybe this one had something, I don't know. But point being, we didn't have great partner. We were getting transfer priced a lot. Like in shipping, it turned out there was a lot of ways that you could get money moving out of your investment, whether it be overcharging for the lubrication, the gas, the services, the shipyards, all those things. That strategy also really helped me think about market structure, because when we looked back and we were doing our AAR, our after action report, the thing we missed really was that was a strategy where there were many manufacturers, so many different places around the world were making ships. And there was few buyers. And so that was asymmetric to the wrong way. And when you have a market structure that looks like that, you only need a very little bit of oversupply to drive down the value of the vessel.
So that sounds like a really exciting experience.
Exciting is definitely an adjective you could use to deploy that. If exciting means that I was wearing a diaper, then yes. Listen, what happened was those assets proved to be significantly more volatile than we thought. And that goes back to this concept of the marginal buyer in these commodity products is more influential than we understood at the beginning. So we were only 10 or 15% oversupplied, but that last 10 or 15%, when you have a market structure where there's just a few buyers, is very, very impactful and very, very powerful on the price and the day rate, which means the daily rent. Those vessels, which were at the peak, we're worth 100 million and we're 100,000 plus a day rent. When we got involved, we're in the 15 to 20. They made it all the way to like $800 a day. And it cost $6,000 a day to just keep the lights on in the ship. So you were basically paying $5,200 a day to someone to use your vessel. Now, that can't persist forever. If people are going to use coal and iron ore and make steel in the world, that can't work forever, but it can work for a time until it flushes out the oversupply. And so old ships and old things like that had to be put to bed. And after that, the market regained its footing and came back to kind of the $13,000 to $15,000 a day rate we see now, which equates to an economic rent where the owner of the asset can get some returns. So that makes sense. It's hard to get through. It makes sense. We bought ships too high. We bought ships too low. And then we were able to kind of exit the complete strategy with a terrific partner that we ended up with, who I would happily do business with again. But when you're in one of those markets where you have that kind of volatility, the one thing I will also add that did save our bacon here, and it's a core tenet and it completely ties into, we may have gotten the first two wrong, which was we weren't humble enough. We didn't realize we were, not the smartest person in the room, and our intellectual flexibility may or may not have been there, but the get home alive thing was there. We did not use leverage or had almost no leverage on this strategy, and that allowed us to wait to see if we were going to be right and not the market take us out, because leverage will kill you in these trades. And not having leverage on this or having a small amount of leverage was a very powerful option for us to be able to sit still and just take a breath, because the one thing I didn't know was steel was going to be a part of the world, and we just had to wait for that.
So great story. I think a very difficult experience in some ways, but obviously a lot of lessons learned. And I guess my question to you is, if you think about how did the lessons learned from this experience influence some of the successes that you've had since then, or how did it influence your approach to investing? And maybe give us another tangible example of how you've had success, either in the transportation business or elsewhere.
Yeah, we do a lot of things, but let's stick on the transportation because that kind of rhymes. All of those things we learned there, we deployed well in aviation. Let's talk about aviation. What did we do there? And we're still very active in aviation right now, and it's been one of our most successful strategies over the last kind of 5 or 10 years.
And just for their listeners' sake, when you say aviation, you're talking about aviation leasing, the leasing of airplanes.
So I'm talking about we are owning and operating the aircraft that when you go to the airline and you get on that plane to fly somewhere, those are our planes. Our investors own a company that's the 15th largest leasing company in the world, between 200 and 300 aircraft at any one point in time we're managing, with all the major carriers, and we have a business where we self-source, structure, and manage all of our own aircraft. That's an 80-person business that's owned by our funds, that's run by a guy named Fred Brown, who's a 25-year veteran in the space, who knows everything, and he isn't babysitting, he's raising our kids, because he's completely aligned with us. So, first of all, the alignment with our partner is right there because it is us. So we have that knowledge. We are not the dumbest person in the room. Our CEO did the very first deal with Emirates Airways. We've been there since the beginning in the space, and the company that we're involved in is 25 years old. So we have that knowledge of the real world to help us, but we also have a healthy dose of humility on top of it.
And no engines falling off.
And no engines falling off. We have no engines falling off. Knock wood. We have a good safety record. That's been a very good positive. But that strategy is also a strategy where, so on the partner side, we have a much better setup. 1, 2, what does the market structure look like there? It's the inverse of shipping. Shipping, I said, there was all manufacturers. In China, they had it was basically a jobs farm. That shipyard I went to had 10,000 people working at it. So, they were all over the country. There's 2 people that make airplanes in the world, Boeing and Airbus. They tell you how many planes they're going to deliver for the next 2, 3, 5, 10 years. The users are diverse and all over the world. And there's constantly new ones coming and going and all the rest of it. And the product is fairly homogenous. So we can take a 737 that's flying in Canada and we can move it to Europe. We can move it to the US, Latin America, anywhere. That's ubiquitous. So our knowledge is transferable across the world. And we have a market where we can see the supply. And now the demand side is important, but it's also highly correlated to the growth of the middle class and the population in the world, which is growing faster than Airbus and Boeing can keep up. So for us, we own kind of 0 to 10-year-old aircraft. We're in a pretty good spot where we have a good floor around those assets, and things need to change dramatically for us to really be impaired in one of those assets.
That's great. So some of the problematic issues that you had early on clearly translating into what is today a very successful business for you and for the firm.
It's almost like being a parent in some sense, where with your children, you watch them have to go through pain and bad experiences where you wish you could just give them that pain of which you have suffered. But sometimes you have to suffer to kind of get through it. So I'm not happy we had to go through that shipping thing. It was very uncomfortable for us, but those lessons have been redeployed profitably.
That's great. Well, thanks so much. We wanted to talk about lessons learned, get some advice for investors around opportunistic credit and other areas that you've had experience in. I'd like to turn back to you as a person, because in addition to your interesting background, one of the things I know about you is that you're very heavily involved in philanthropy and in charitable causes. And I'd love for you to talk a little bit about some of the work that you've done with the Secret Service and elsewhere, because that's also an important part of our business, is giving back.
Sure. I mean, we started off with a story about pay it forward. And I know that through all the good fortune and luck I've had in life, that it is my obligation to do that. So thank you for this question. It's near and dear to my heart. And you've been very helpful in some of the causes. So thank you for that. For me, and I would include my wife in this, in terms of our willingness and wanting to kind of give back, there's 3 areas where we've really focused. One is areas where we've kind of had an affiliation. So you mentioned the Secret Service. Along with my fellow former Secret Service agents, we have established a 1865 dinner where we run an annual dinner where we have an interesting speaker and we raise money to help agents, uniform division, employees of the service who have been injured in the line of duty get by. It's very quickly after someone gets killed or seriously injured and they fall out of the limelight, people forget about the long tail of life afterwards and how to recover. And there's often not a lot of financial resources for these folks. And so we've been successful in doing that. The second piece of the puzzle that I think is very important is, I mentioned this at the beginning too, education and being able to graduate without debt. So Libby and I, that's my wife's name, we've been very supportive of scholarship at my alma mater, University at Albany, which has a very high amount of first-time students. We've been there. Libby's alma mater, Lehigh. We've also been involved in mental health for students, because it's hard to learn if you can't get the emotional side of it in check. And then the last thing that we're involved in, and this is largely my wife, but I'm particularly proud of what she's doing there, is something called Interfaith Outreach, which is in our local community. And it is a real full wraparound service for folks to help them kind of break the cycle of poverty, where they can have all the services needed to kind of move into a more stable life. And whether that be food, clothing, education, housing, all of those types of areas of assistance. It's a non-denominational, it helps everyone. And, I feel like days like now, those things are more important than ever.
Yeah, well, that's great. Thank you for sharing that. I mean, again, we want this podcast to be informative and educational, but also talk about the personal side of our business, because a lot of people are doing great work. So thank you again for your service to our country and for your charitable work. And thank you for being part of the podcast today. I found this to be a great conversation. I hope you enjoyed being with me today.
I loved it. Thank you very much.
Thank you for listening to today's episode. Please rate, review, and subscribe on your favorite podcast platform. I'm Brian Resnick, and you've been listening to Uncommon Capital.